Hey everybody, Monday. What is it? June 10th. And it is Monday. I sent out the new issue of MMT Trader. If you want that, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. I also have Zombie Trading. That is my daily Forex signal service. We front run the zombies because we know how they're going to behave. We take their money and we get out before they die. And of course, my video courses, the 25-hour Forex online trading video course, the understanding the daily treasury statement. That's a really great one. I mean, you really have to get yourself familiar with the daily treasury statement. That is probably the greatest economic and financial resource, market resource. If you understand it, it's out there. It's put out every day by the Treasury at 4 p.m. Eastern Time. It's free. So much information. I mean, even if you're not in the market as a trader or an investor, I mean, you will understand so much from, having some knowledge of that document, that resource. I mean, that's literally like looking at the checkbook of the United States government. You see all the withdrawals and all the deposits on a daily basis. It's like looking at your own checkbook, only magnified to the zillionth power. I mean, when you see how much money flowing in and out between the Treasury's account and the financial system on a daily basis, you're talking billions, tens of billions, sometimes hundreds of billions in a day. You talk about inside information and these algo traders. I mean, when you know that 180 billion is going to go into the financial system tomorrow, you think you're not able to make money off of that? Of course you are. Anyway, I have a course on understanding that. 99 bucks. It should be 99,000 bucks. It's 99 bucks. And of course, MMT Value Stock Selection course. And you can get all three for $295. My special offer, 3-course bundle. The Forex, Understanding the Daily Treasury Statement, and MMT Value Stock Selection course. Anyway, let's talk about the market. So one thing I find very fascinating, nobody out there, with the exception of yours truly right here, has made any connection between the debt ceiling and what is happening in the bond market, or what has happened in the bond market and with interest rates. I mean, all of these big shots out there on Wall Street, right? The big analysts at Goldman Sachs and JP Morgan and Morgan Stanley and wherever else, Bank of America, Merrill Lynch, nobody has made any mention, and this is it's hard to overestimate just how important this is. It's hard to overstate just how important the impact of this is. This has put a ceiling, right? It's called the debt ceiling. This has put a debt ceiling on the issuance of treasuries, the most ubiquitous collateral in the world, the most important collateral in the world. Talking about banks, pension funds, investors, you name it, has put a ceiling on the issuance of treasuries, right? If this was happening in any other market, in commodities, let's say, for example, OPEC decided it wasn't going to pump any more oil. What do you think would happen to the price? Does it take a genius to figure that out? So here is the government saying no more treasuries are going to be issued, and everybody's like, oh my God, bonds are rallying and yields are collapsing. There must be a recession. They can't connect the dots. They can't see what is so it's obvious to me. I don't know. Can you imagine if OPEC said no more oil? We have a ceiling now. What do you think would happen to the price? Exactly the same thing. U.S. Treasuries are the most important collateral in the world. The dollars that countries earn trading with the United States, look at China, right? We're always talking about the 2 trillion or whatever of dollars that China has in reserves. It's all parked in treasuries. There's no new issuance of treasuries. It's a ceiling. and all of these big shots on Wall Street cannot make the connection. It's really amazing. Me, I'm the only one in my report, and my people know how to profit from this. So that's going on, and I've been talking about that. And in conjunction with the debt ceiling is also the fact that, the Fed, since December 2017, has been engineering a decline in reserves in the banking system. This has been ongoing, right, with the shrinking of their balance sheet. So the two things combined, I've said this before, it's like a tsunami, the perfect storm of shrinking reserve assets, right? Reserves are bank assets, so the Fed is literally sucking away, taking away those assets. But at the same time, the government is not able to replenish those assets with the sale of treasuries. It's fascinating. We've never seen this before. Anyway, and then you have gold, which is very interesting now. And I spoke about this. I talked about this last week when the Bank for International Settlements, that's the central bank for central banks, reclassified gold as a tier 1 asset from a tier 3 asset. That happened back on April 1st of this year. Now, what does that mean? It means it makes gold functionally like a treasury. It's like a treasury alternative. Banks can hold gold now as an alternative to holding treasuries and be in compliance with the BIS regulatory regime. And that goes for commercial banks too. It doesn't mean they're all going to run out there and buy gold, but this is a paradigm shift. Okay? A tier 3 asset is not the same as a tier 1 asset. A tier 1 asset is the top. That's basically the same thing as saying cash. Okay? That's reserves. That's treasuries. The safest, most secure, most liquid asset. That's the classification now for gold according to the BIS. It doesn't mean I agree with it, but that's what it is. You don't hear much about that either. And that's why I think, I don't know, but I think any correction in gold will be relatively mild. We'll see what happens. Today it's down, okay, but we've had a pretty good run. The dollar index bounced off its 200-day moving average it hit the 200-day moving average on Friday. It's up a little bit today. I still say the dollar is in a long-term bear market based on fiscal expansion, based on the trade deficit, and really it was based on the Fed's rate hikes. That has ended. So that put a little bit of a bullish impetus into the dollar, and that happened back in January. Actually, if you go back to December, the dollar's decline was resuming. Go back and check the dollar index in December. It was starting to break down from that. At that time, it was like a 10-month rally. It started to break down, and then in January, the Fed said, that's it, we're not raising interest rates anymore. And from that point, really, I probably should have flipped around and gone long on the dollar at that point, because that was the inflection point. But I stayed because of the bigger macro picture of the fiscal expansion and the trade deficit. The dollar rallied, as we know, but now it's starting to come off again. So that's basically the picture. Now, I called the exact turn of the stock market. I said, even weeks before it happened, I said the window of the turn will be end of May, early June. As a matter of fact, 10 days ago on a Friday, when the market was down sharply, I said the support is coming in. It'll be within a few days, and that was it. It came in. And that has to do with these reserve flows as well. All right? When reserves flow into the banking system from government spending, that piles up on bank balance sheets. It slows down the accumulation of assets by the banks. Everything flows off of that. And vice versa. When those reserves are drained out through taxation, or what is the normal procedure of the sale of treasuries, which we don't have now anymore because of the debt ceiling, But when those reserves are drained, it frees up the banks to add other assets, namely loans and leases, securities, that sort of thing. And we've been seeing this very, very tight correlation between those flows and what happens in the markets. Now, I'm the only one who talks about that. That's a little bit more complicated than something as simple as the debt ceiling, which nobody seems to understand why that is causing yields to collapse. But whatever. I'm happy. My people are happy. We make money off of that. That's inside information. That is free knowledge. But nobody wants knowledge. They just want to guess, which is fine with me.